How was Disneyland built? You're probably not aware, but roughly 726 million people have visited Disneyland since its inception. And about 725.9 million people are probably unaware that there would be no Disneyland if not for a financial strategy and a concept known as infinite banking. Let me take you on a little timeline here and kind of share the story. In 1926, Disney Studios was opened, right? And 2 years later, Mickey Mouse was created in 1928. It wasn't until 1950s that some of the more favorite films that you probably remember were created, like Cinderella, Peter Pan, Treasure Island. Around this time period, for several years, Walt Disney was considering building a theme park after he visited Griffith Park with his family. Now, he had two things that he wanted to achieve. He wanted the theme park to be clean and a place where children and parents could have a great time and have fun. Originally, in 1952, Burbank was going to be the location for Disneyland, but it was later discovered that Burbank was not fit for Disney's vision or his dream for this theme park. So he purchased a property 35 miles south in Anaheim. 160 acres is where he decided to build his dream. Fearful of criticism from shareholders of Disney Studios, Disney founded WED Enterprises, which later is known as Walt Disney Imagineering. It was around this point that Disney was struggling to find banks and investors who believed in his dream to help fund the project. But Disney believed in the dream so much, he decided to fund it himself. He found the funds by selling his second mortgage and his infinite banking strategy. Now, with that funding, Disney was able to pull in designers and animators to help design his dream. The people that were involved in this project were known as Imagineers. Now, in July of 1954, that's when construction began on Disneyland. And July 1st of 1955, the park opened. Now, it was broadcast on ABC to over 70 million viewers. That's half of the US population at that time period. Now, you may be asking yourself, what is infinite banking and how did Disney use it to fund his dream? Well, let me explain how you can also fund your dreams using this same strategy. Now, what Walt Disney did and what you can do yourself is you can fund your own whole life insurance policy, also known as infinite banking, in this strategy from an insurance company. Now, historically, inside the internal rate of these policies, the growth is roughly anywhere from 4 to 7% historically. Let's say that you've accumulated $100,000 in this example inside of your policy, and one day you have an investment idea or a dream or a vision that you have, just like Walt did, and you want to fund the project. It's very simple. What you do then is you tell the insurance company, hey, I'd like to take out, in this example, $90,000. Now, the insurance company is going to ask you, Mr. and Mrs. Client, how do you want your money? Do you want it electronically transferred to you, or do you want it mailed to you? With that newly found dollar, you're going to be able to go and take that and invest in your dream or your project. Now, hopefully you're earning a bigger return than what the interest charge is inside of the policy, but let's say you earn 11% and there's a 5% loan charge inside of your policy. What you're then going to do is then take the money from here, a portion of it, put it right back into your bank. And the reason it's called infinite banking is as you fund your own project, as you fund your own loan, you're going to pay back the loan that you borrowed from your bank, and you can do that an infinite amount of times. And that is why it's called infinite banking. If you enjoyed that video and you want to learn more mindful money concepts like this one, subscribe.